Welcome to the Daily Update Podcast, where I'll go over the action in the market for Wednesday, August 13th, and we'll see how things look for Thursday, August 14th. The major indexes delivered a strong performance on Wednesday, with the S&P 500, NASDAQ, and NASDAQ 100 all hitting new all-time highs. What's particularly encouraging is the broader market participation that was seen, which helped reduce some of the negative divergences that have been lingering. The S&P 500 opened with a gap higher, breaking above the R1 pivot at 64.66. It reached an intraday high near the 64.75 level before pulling back all the way to the unchanged level, which acted as support. By the close, the S&P 500 was up 0.32%, settling right at R1. Volume, while still below average, did show improvement, signaling growing conviction in the rally. Sector performance was notable, with value stocks outpacing growth stocks. Mid-caps and small caps also displayed strength for a second day, reflecting a broadening of market participation. The discretionary and healthcare sectors were standout performers, while mega-cap names including Nvidia, Microsoft, and Meta lagged behind. Meanwhile, materials and semiconductors, tracked by the SMH ETF, pushed to new highs, underscoring strength in these areas. Looking at economic and geopolitical factors, beyond the positive price action, several economic and geopolitical factors are shaping the market environment. On the economic front, CPI data, which was released on Tuesday, suggests inflation is under control, bolstering expectations for a rate cut in September. Treasury Secretary Scott Bessent has advocated for a 50 basis point cut, with a further 150 basis point cut reduction proposed over time. However, Chicago Fed President Austin Goolsbee struck a cautious tone, citing concerns about possible rising inflation in the service sector. Looking ahead, key reports are on the horizon. Thursday, August 14th, we'll see initial as well as continuing jobless claims and the Producer Price Index, or PPI. On Friday, retail sales data will provide further insight into consumer health. These reports could introduce volatility, so investors should stay vigilant. Geopolitically, the markets are keeping a close eye on developments including the upcoming Trump-Putin meeting, as well as ongoing trade deal and tariff discussions. Any surprises could ripple through U.S. as well as global markets. Looking at the technical indicators and market sentiment, from a technical perspective, the market is flashing mostly positive signals. The S&P 500 is trading above its 20, 50, and 200-day moving averages, with momentum indicators including the RSI, CCI, stochastics, and MACD all pointing to bullish conditions. Breadth indicators, such as the advanced decline line and new highs, new lows, confirm broad market strength. That said, there are some cautionary notes. The Chaikin money flow has been flat after declining, which could suggest the smart money is doing some selling. Additionally, the S&P 500 is testing a key overhead resistance level at 64.68 on the weekly chart. A clean break above this level could signal further upside, but failure to do so could lead to a pullback. Market sentiment also continues to shift more positive. The VIX is declining, reflecting reduced investor anxiety. However, we're seeing increased options activity and hedging through puts, which could indicate bearish expectations among some traders. Interestingly, the risk-averse sentiment might actually support further gains through reverse psychology, as contrarian indicators often do. Looking at asset flows and valuations, where is the money moving? Asset flows show capital exiting cryptocurrencies and developed market equities, while flowing into money markets, investment-grade bonds, and high-yield bonds, also known as junk bonds. This suggests a cautious but selective risk appetite among investors. Concerning valuations, the S&P 500's forward PE ratio stands at a lofty 22, well above 20, indicating an expensive market. However, robust earnings growth, up 18% since October 2022, provides some justification for these elevated prices. Still, with August and September historically weaker months, especially in post-election years, investors should remain mindful of seasonal headwinds. Looking ahead to Thursday, August 14th, the S&P 500's key level to watch is 64.68. A break and close above this resistance level, not only for the day but for the week, would confirm the bullish trend, while stalling here could signal a potential pullback. Pivot points will likely act as either support or resistance, so it's good to keep an eye on those levels. Thursday's jobless claims as well as PPI data, along with any geopolitical headlines, could drive volatility. Additionally, with options expiration looming on Friday, we may see some positioning that influences trading. The S&P 500 remains positive across all time frames, with improving short and intermediate term conviction. However, lingering negative divergences and resistance levels warrant caution. In conclusion, the market is in a strong position, helped by broad participation and positive technicals. However, resistance at 64.68, upcoming economic data, and seasonal trends suggest investors should stay alert. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available, or to access the daily newsletter, please click on the links below.